welcome everybody to a look in the future. What would you do if you can go to the future and ask yourself questions? Specifically, how do you get your firm transition into advisory services? Well, luckily, we get to ask the time traveler himself, Paul Latham, and learn the knowledge we need today to become the most relevant advisor to our clients. If you've watched this show before, you know what I'm talking about. I'm Garrett Wagner, your entrepreneurial CPA channel host. And as always, I'm joined by the legendary, the time traveler himself, Paul Latham of Hayden Solutions. Now, Paul, I've been thinking about this, and I'd love to kind of pick your brain, hear from your experience on how you got Latham's as an accounting firm. There was a bunch of backwards-looking CPAs, and how you got them through this transformation, because that's one of the hardest parts, as we talked about before. You can have process, procedure, you can solidify the intangibles, but how do you get the people to make that pivot from backward-looking reactive to forwards-looking proactive?
Yeah. Hi, Garrett, and good to talk to you again. So it's actually, I suppose for me anyway, it's interesting to think back and look back at it, and it's certainly part of that time traveling that you referred to. I mean, the period of time that we're talking about in the UK, it was the early 90s, and just thinking about that, I mean, we didn't get email till 1998, let alone the internet. So all that stuff about intangibles and virtual teams, I mean, that had yet to even be thought about, let alone be used. So it was the early 90s, and to be honest, the beginning of it, from our perspective anyway, was, in terms of thinking about it, was a report that the Institute of Chartered Accountants, which is sort of like CPAs in England, they produced a report in early 90s, I think it was 93, and they basically said what you do is a commodity and increasingly going to be a commodity, and your future's bleak, and you're going to be, working harder and faster for basically less pounds per hour or dollars per hour, and you're going to be basically you're not going to be having a lot of fun. And there were three or four of us actually, partners, who sat around the table, and we basically said, we don't want to do that. So our embryonic thinking was based upon pure self-interest, which is that we actually wanted to enjoy ourselves and not have to work harder and harder and harder for less money. But obviously in the beginning, we didn't know how to do this. And there's an element of, we all sort of stumbled on it by accident. I was thinking back and thinking, which came first, the chicken or the egg here? But I think what actually came first was that we discovered that doing more transactions with our existing customers was sort of relatively easy. Go back to the 4 ways to grow a business, and within those 4 ways, there's only 3 ways to grow revenue, and that's either get new customers, do more things with your existing customers, or increase the average value of the work you're doing. And far and away the easiest, and the way we stumbled on first, was doing more things with our customers. And that actually, was preparing regular, what I call monthly management accounts, so internal accounts. Because in those days, we tended to see our clients once a year. We basically did their tax return, and we sort of produced their accounts or did their audit at the end of the year. So on the whole, we saw people once a year. And then we had this revolutionary idea that said, shall we do their accounts, monthly or quarterly? Typically, it was either monthly or quarterly. And that was relatively easy. It was actually revolutionary in the town that we were in. We were absolutely revolutionary and it hit. It was the talk of the town. But these accountants come and see us quarterly or monthly, and we were pretty successful at it. And what we discovered, obviously, first of all, that increases the number of transactions, and what we really were was sort of external CFOs before that became a trendy phrase. That's sort of what we were doing. We didn't call it that. And we discovered, obviously, that when you had a set of accounts for the month or for the quarter, then obviously you had a forum for discussion. And in the beginning, that forum was talking about the accounts, but it sort of morphed into beginning to talk more regularly about their business. And I think what then happened was that, we actually went on a course, and somebody introduced me to this idea of 4 ways to grow a business. So I'm thinking, oh, okay. So we've already seen that that works. Doing more transactions with our existing customers is easy. But what we actually discovered was that it was hard to keep the discussion going. But what we did know was that meeting them more regularly, having a monthly chat or a quarterly chat, meant that we were in a much better position to identify needs for add value services. So, I'm just going to break off talking there, Garrett, just so that you get a chance to put a word in edgeways. But that's how it started, and then there's a whole story of how it developed from there.
Which is it's always that interesting, I find, introspective how, here we are in the US going through the same thing, but just so much later in time. Where, the ASCPA put out in the mid-2000s their report on the future, which said the same thing that yours said in the early 90s.
Yes.
We just got that report here 10 years later, and now we're kind of struggling with, how do we go through this? Do we do it? Do we not? And just to see just a lot of resistance from firms to just kind of changing. Like, we should all know by this time it's inevitable, like we talked about.
I think the reason why it's later here, this is my own personal observation. The reality is that your tax code is insanely complex here relative to most places in the rest of the world. And because you've made it insanely complicated, that's a sort of benefit, but it's also sort of a weakness for accountants. Obviously, the benefit is it gives you work, but the weakness is it sort of pigeonholes you into doing something specific. And by contrast, in the UK, the tax code, we never used to think it was simple. Or I certainly never used to think it was simple until I came here. And then I realized it was really simple by comparison. And sort of in a way, because it was relatively simple, first of all, we don't have, states and all that interaction between states and federal and so on, which in itself is just a massive layer of complexity. But I think in a way, because of that, you could not just rely on being this sort of tax guru. You had to be a bit more than that. But the benefit of that was that you naturally gravitated to being a bit more interested in their business, specifically from our point of view, and less just interested in the nuts and bolts of a tax return. And I think that the great benefit of that was that then the client perceived you as being somebody who was more than just one particular narrow area. And so it wasn't such a jump necessarily from the client's perspective to think, oh, I'll go to my accountant for some general advice. And that's, I think the challenge here is that you've allowed, it's good because you've guaranteed work every year. The trouble is that technology is going to take it all away. And you've got to find something to replace it with.
I also think the other big key thing you said in there is that the best way to grow your business from a CPA firm standpoint is to do more stuff for your current clients.
I think it's the easiest way to start. Yeah.
Yeah. If you look at probably the average client can probably use 4 distinct services. I'm just kind of throwing that out there. So we're at 1.
Yeah.
The tax return. So there's 3 more things that they need that they might even be getting elsewhere that you can put on there.
Yes. The interesting thing with us was, you see, absolutely inevitably, it is easiest to start with your existing clients, although there's a slight difficulty to that because they're used to the way you're working. Mm-hmm. So for something like, for example, the regular management accounts, that's a really easy step. But I think we decided, you see, we did look at this and say, well, there are 3 ways to grow revenue. You either get more customers, or you do more things with the ones you've got, or you increase the average sort of added value in the mix, doing more added value stuff. So the advantage with existing customers, it's sort of easy to add a couple of things, but maybe it's slightly harder sometimes to change what you're already doing for them from a point of view of radically changing. And truthfully, what we did, we practiced on new clients. So although we actually definitely increased the number of transactions, we probably multiplied it by 4 just by having, on the whole, let's say on average, doing quarterly accounts rather than annual accounts. So,
yeah.
And that also gave us the forum for discussion. So things like tax planning became easier because suddenly we were there after 9 months we had a pretty good idea of what the year was going to look like, and therefore there was a big opportunity to tax plan. So that stuff happened, but there was a sort of limit, if you like, to how much we could grow doing that. And we did that pretty successfully at first, but I think we decided we needed to do more, or we wanted to do more. And this is where we got into this whole idea of becoming more like an advisory consultant. But then, of course, you've got this sort of concern of, can I do it? And am I going to upset my clients? So in my head, this became a laboratory experiment. And it's sort of easier. It's going, coronavirus and vaccines and things, the reality is we practice on rats and things before we start putting vaccines into humans. And in my head, the rats were the new clients. Because what was the worst that could happen? Just in terms of winning them, first of all. So we developed this whole presentation which was brand new, of what we said to a new client and the choices we gave them. Things like, do you want the basic reactive service? Do you want the proactive service? Do you want the strategic service? It costs X, 2X or 3X, whatever it may be. And, et cetera, et cetera. And and then that's where we stumbled upon things like, for example, doing a diagnostic. The very first thing we do, understand your needs, because we want to be proactive. So we're going to get you to do a diagnostic. What that then made us realize was, crikey, these people want a lot more than we ever thought they did want. We thought we knew these people, but suddenly they want, as you say, they probably want 4 or 5 things, not just one. And so what happened was we practiced on new clients, and it helped us to gain confidence. Because what we realized was, first of all, we were winning a disproportionate number with this rather different, we never talked about being an accountant in the first meeting. We talked about helping them to grow their business. We didn't talk about, audit standard number 9 or something. They weren't interested. We talked about helping them to grow their business, and it was different. And then what happened was, because we became good at it, I think our confidence boosted. And then we realized that we were providing a mediocre service to our existing clients. And it gave us the confidence then to go back to our existing clients and say, do you know what? We're treating you like a second-class customer. If we've had you as a client for 5, 10 years or whatever, do you know what? If you walk through the door today, you get a way better service because we'd offer you way more choices. Why don't we treat you like a new client? And we just said, look, we'll do it free of charge. We'll have an hour's meeting, exactly the way we do with a new client. Go through this questionnaire. If you don't want to change anything, fine. 60 to 70% of our clients upgraded overnight. And so there's a subtle mixture there somewhere of doing some of the easy stuff with existing clients, but also recognizing that what's the worst that can happen if you're pitching to a new client with this stuff? The worst that can happen is they say, go away. It's not the end of the world. But in truth, we gained our confidence. So there's a mixture there of winning new customers, doing more things with the ones we had, and upgrading the service levels, and all 3 combined, which meant we exponentially grew.
So Paul, if we can wrap it up on this, if you're in a firm today and they're trying to get started, do you think it's better for them to kind of like try on a new client, or have that conversation with a current client? Here's the new way we do things.
Well, I think with the benefit of hindsight, you see, we did it our way because we had no model to follow. And so we sort of felt that it was better to practice on the laboratory rats, because we had no other way of doing it. Because now we have a tried and tested way of doing it, we, on the whole, I would say 9 times out of 10, we say start with the existing clients, because it's far and away the easiest. And if we use the right words, then they won't be resistant to this. The only time I would suggest doing otherwise is when you've maybe got an accountant who, for example, recognizes that they do need an influx of new clients, in which case you might put a particular emphasis there.
And that makes sense. And I've seen that from my own personal experience talking to clients, kind of just that, like you said, that the wording you parse out there, hey, this is how the new way we do things. If you're a new client, you get the service this way. They're never going to like test the waters and call them new clients, but it sets it up. Let's go through this.
Yeah.
I'm not going to let you see how it gets done firsthand without charging you.
Yeah.
It's a great way to lead them through.
Exactly. And the other thing, just briefly, because you want to wrap it up, but the other thing to recognize is that the team are much more comfortable with stuff that sort of starts from clients' needs than trying to sell things. So this is a very natural and easy thing for accountants. You know, they like to help clients with their needs. They don't like selling them things. So starting from needs is sort of clearly the best way to go.
Couldn't agree more, Paul. As always, thank you for the time. Thank you for sharing. And if you want to see what this process looks like for you inside your firm, so you can see how you can do it for your clients, take a couple minutes, click on the link below, get your free biz survey objective assessment, and see how ready your firm is for the future. We'll then meet with you afterwards and share the results, just like you would take your clients through the process. See firsthand how it works on you as the client, so you can do it to your clients to become relevant to them. As always, thank you for watching. You can click to subscribe to the YouTube channel. And as always, we challenge you today to take action to change the world and invest in yourself.